Hello everyone and welcome to my YouTube channel. I know I'm making this video after a long time, almost a gap of 1 year since I had uploaded my last video. But in my last video I had mentioned that I expect sort of negligible returns from the Nifty or sort of the Indian stock market in the year 2022, and that's been the story so far as well. Like if you see, Nifty had hit the 18,000 mark in November 2021, and it has been hovering around that 18,000 mark almost for the last 1 year. There has been ups and down obviously because of the trading activity, but that it has been in that zone, and there has been negligible return that one would have got by staying invested in that stock market. You would have gotten more returns if you would have invested in FD, given the rates that has been provided by the banks in recent times. But today's video is not about investing in stock market. It's about the recent developments that we are seeing in the Adani versus Hindenburg case. And you would have already gotten the detailed report of it by seeing it's almost on every news channel is covering it. Almost most of the YouTube channels have also covered it. So you must have gotten a pretty good idea about the details of that report. But what was missing from that news coverage was a viewpoint of a small time retail investors, and that's been my focus so far throughout my videos as well. Like, what should a small time retail investor should be doing at this situation? And no one is really worried about it. They are talking about how Adani lost the third position in the billionaires list, how SBI LIC has been losing money, how Hindenburg has been gaining money by shorting the position. But no one is really talking about what a retail investor is doing at this point in time. All the big investors would have exited this stock after the news, but most of the retail investors would be still stuck, given that they would always give a chance for a recovery, but and that's why they get stuck in such stocks. And we'll basically discuss upon those points. For simple understanding, I'll divide this discussion into three parts. In my first part, I'll basically go through some of the useful terminologies that has been raised in that Hindenburg report. One such terminology is the forensic auditing of a stock before choosing to invest in any company, and that is very useful tool. I have covered that in my previous videos as well, like how corporates usually do this accounting malpractices in their, they basically project very good profit numbers, good sales numbers, revenue numbers, but behind the scenes they have been pretty much manipulating the accounting, and you can get a pretty much idea about it by reading the balance sheets and by going through the investors document. But generally a small time retail investors don't find time in reading, going through the document for each stock and then investing. Now, this forensic auditing is nothing but it is generally, the term forensic is used in a criminal context, in case of criminal cases, and that's very much suited for this corporate fraud as well, because it is ultimately a criminal activity. And forensic research is basically going deep down into each nitty-gritties of an accounting practices that the company has been following. The first time I heard this term was from Saurabh Mukherjee. He pretty much is vocal about this subject, and has pretty much consistently during his interviews mentioned that he finds it very difficult to invest in the Indian stock market, given that we have such huge amount of stocks. But there are, after screening for accounting malpractices, you will filter out most of the stocks, and only a few selected stocks will be churned out of that screening process because of this accounting malpractices. And he, in his book The Diamonds in the Dust, have mentioned a clear strategy that they adopt at Marcellus to churn out this stock. And keeping that as a reference point, I have made my own sort of metrics that I use in screener for screening the stocks, and a detailed explanation of it I have already provided on my previous videos. I will also link them in the description. Now, this tool is very much useful for a small time retail investors, given that they lack accounting knowledge, they lack time, for they just want to get the benefit best out of the stock market. And there has been pretty much rise in the demat account. You know that many new investors are coming into the stock market, and it has been consistently seen in the Indian stock market, whether it be the DHFL case, Yes Bank case. Investors have lost a lot of confidence of investing in the stock market. and that has built a very negative image of India sort of among the foreign investors as well. And that's what I think Saurav Mukherjee also pinpoints. The sort of investors that he interacts with find it very difficult to adopt these malpractices, and that's why they stay away from investing in the Indian stock market. So definitely this forensic auditing of a company is pretty useful tool when you decide to invest in a particular company. Coming to the second point of discussion, I just wanted to give viewers an exercise that you go watch my previous videos on this metrics that I have designed in Screener and compare an Adani Enterprise stock versus an Pidilite stock. Now, why I'm choosing Pidilite is because Pidilite has over the years been very consistent in giving returns to its stakeholders. There has been very few instances of bad news against Pidilite, and it has been consistently making money for the shareholders as opposed to Adani, which is like in the past 3 years it has sort of skyrocketed. So these two companies I think will be a pretty good comparison, and you will yourself see the results, like how the Screener tool is sort of useful in identifying good companies, and that's how you can use this metrics to stay away from such companies which does indulge in such accounting malpractices. I will also do the same thing, same exercise, and also make a video on it. So if you're not able to understand, like do it yourself, you can watch the videos which I'll be putting out very soon. But do comment in the chat that what are your findings from the Screener tool that you yourself might have developed, and sort of get an understanding about how to research upon a company before choosing to invest in it. Now coming to the third point, the really worry point about a retail investor is what to do now, what steps should I take. The big investors would have already gotten away, like they would have already got the news and they would have already sold their position and you would have cleared up. Now the only people who get stuck in these situations are the small time retail investors, who basically just waits on to find some good news of hope, and that never sort of comes in such situations. Stock starts to plummet, it's usually very hard to recover from such news. Now let's consider a scenario in which the investor would have invested in, let's say, Yes Bank, Jet Airways and Adani Enterprises, which were pretty much in the news, also have their momentum, and pretty much everything was good about it, and suddenly one day it will have fallen and all the investors money would have lost. So what many YouTube channel, what they do is provide information, provide them knowledge, but no one really gives out a solution like what should be your next step. And this sort of diminishes the confidence of other retail investors also, and that's why they choose to stay away from the stock market. Now talking about the Adani Enterprises stock, let's say you would have invested in this stock at a stock price of 3000. Now that level is very difficult to achieve again. Now it is currently trading at 1500 levels. 3000 is sure shot a no for the stock in the next 2-3 years at least. It will take a very good positive news for it to bounce back to the 3000 levels. In recent times we don't see that coming up. So an ideal strategy, to safeguard our money is to exit this stock in a step-by-step manner. Now, one sort of good news is in this stock is that the bond price of Adani Enterprises have not still start to fall. I'll also give you a story about Yes Bank. Before the Yes Bank stock plummet happened, the bond price have fallen from 80 to 40 range, and during that fall only most of the high-end investors sort of get away from that stock. And when the bond price sort of reached 40, the stock plummet, sort of the news broke out and the stock plummeted to its lowest values. So there was still hope for retail investors when the bond price, by seeing if you would have tracked the bond price, would have exited pretty at early stage during the Yes Bank crisis. So bond price is again a very good indicator for us to know that something is bad happening in the company or not. Now again, the news of Credit Suisse not accepting Adani bond as an collateral, that nearly didn't affect the bond price. So that is sort of a very good news in terms of an investor in Adani Enterprise. So I would suggest for such investors who are invested in Adani Enterprises is do track the Adani bond prices. That is also a very good indicator. Once the bond price starts to fall, that means that something is very fishy about this company, and then you exit completely out of that stock. But for now, you can hope for some recovery in this stock, and then at that recovery level, you can choose to exit. Don't expect that you will earn profit from it. I would suggest that you get out of it for minimal loss that you can, and invest in some other company or invest in FD where you will recover that 8% of money that you would have lost in the Adani Enterprises. But exiting at this stage where it has already bounced back from its 200 level simple moving average, we would have seen yesterday that the stock has bounced back quite rapidly from its 200 exponential moving average. So that is again a good news. The bond prices not falling is a good news. So you can expect some recovery for now, but that will be again a very short term recovery. Long term positions you can't maintain, or don't try to start your investment at such low levels also, because many people now will think that it has fallen very to a good level. Now is a good time to start investing in Adani Enterprises. But such companies where accounting malpractices happen, in no time this company can go from 1500 to 10 rupees as well. So don't start your investment in such companies where you see when there is a news of accounting malpractices. Generally stay away from such companies. Invest in good companies where consistently you would have gotten return, and that's the way you can make money in stock market over long period. When you don't have accounting background, you just want to invest your money someplace and forget about it. So I think stock market is a good place, but you should choose your company wisely. So just briefing out on the third point for retail investors, two good news is that the bond price haven't fall, and yesterday also there was a sharp rise from this 200 exponential moving average. So those are two good points. Expect a good recovery from now and exit at that position. Don't wait for to get in profit and then you will exit. Don't wait for such. Go for the minimal loss strategy and take your money out and invest in some other stock, or invest in FD for a safer return in 1 year, because the FD rates are also very good. You can expect the loss that you made in Adani and cover it in the FD, so to say, in 1 year time. So that's what the recommendation would be for Adani Enterprises, who the small time retail investor who are stuck in this position. I'll definitely wait for all your comments on the exercise of comparing Adani versus Pidilite. I'll soon make my own video on it, and there will discuss in detail how to use screener for quickly screening of stock when you are identifying a company and deciding to invest in a company. How screener can be a useful tool. So that's it from this video. I hope you find this useful, and see you next time.